Hey, everybody. Corey Raymond, your host here for the Wisconsin Investor Podcast. And as usual, I have another guest today. We are talking about a different topic than we've ever talked about on the show before. So I'm super excited to get into this show with you. Before I do, though, I always bring up our sponsor, Wisconsin Discount Properties. You know, every week, guys, I bring you either a deal that you missed out on to create some FOMO, or I just talk about our process. And so today I'm just going to talk about the process at Wisconsin Discount Properties. You know, one of the biggest challenges in real estate is finding deals, right? If you can find money, well, then you got to find deals to place it somewhere, right? And before you can go find money, sometimes you got to have some deals to be talking about. And so getting on our buyers list at Wisconsin Discount Properties every week, we're putting good quality deals in your inbox, spreads for rentals, flips, whatever your exit strategy is. All you have to do to get on that list is go to our website, Wisconsin Discount Properties, plug your information in, and you'll automatically get added to the buyers list where you get text updates and email updates. Every single week, we put the offers and the deals out on Monday mornings. And by Thursday at 1 o'clock, we accept offers. And if you're the highest and best offer, you got a new project coming to you and you're building wealth or building your income. With that, let's get into today's episode. So today I have Dr. Kate Gress. Did I say your last name right?
You did. Yes.
Okay. Awesome. How are you doing?
I'm great. It's another beautiful day in Wisconsin.
Good. Absolutely. Well, at the time we're recording this, Kate, we met last week at a networking event called the REI Success Club. So if you've listened to previous episodes, audience, you've heard me talk about this. You've heard me talk about the power of networking. Today, Kate, I have a feeling you're going to probably have a lot to share about the power of networking with what you do. But before we get into that, can you just tell the audience a little bit about you, your background, and how you got into real estate?
Sure. So I am a chiropractor. I've been practicing for 26 years. I have a practice. I do not see patients. So I just work, basically on the business. I have a couple of associates that see the patients. And I got into real estate 23 years ago and built a commercial building with some rental space. Yep. And that was basically to house my practice, right? And I always thought I was going to do more in real estate and kind of wanted to keep going with that. And I kind of took a pause. So it just kind of, it got busy, practice got busy, life got busy, kids, family, that sort of thing. And then a few years back, I said, okay, I'm going to do more. I'm going to do more real estate. And part of my exit strategy too. I knew I was going to be selling my practice, coming up in the near future, and wanted to have something else to do, basically. So started acquiring some single family and some small multifamily properties. Then I became a passive investor in offering a syndicate in multifamily. And that's where I actually met my one of my business partners now that I do the syndications with. And so, just basically meeting him that way and talking to him about syndications and, how do I go big? How do I do this in a shorter amount of time because I'm selling my practice? And that's kind of what I want to do is just go full in. So that's kind of the story. So then I just started doing it, started learning, and
that's amazing.
Yeah.
So you basically, what I'm hearing here, the key to your progress here, Kate, is networking. So you went in, you met somebody who had this syndication, right? And then you started asking questions, right? How do I do this? How do I do what you're doing? How do I grow on a bigger scale? And then it sounds like you started just taking action based off of that. Is that pretty accurate?
That is pretty accurate. Yeah. And you said networking, it is all about networking. I don't care what business you're in, chiropractic, real estate, it's all been about networking. That's how you meet your people, how you, in real estate, find your deals, right? So that's been invaluable. So networking and then just meeting those people and just learning. I love learning and doing what I can, taking it all in, absorbing it all, and started coaching actually with a coach for learning more about syndications so that I could just learn as much as I can and just be the best that I can at doing what I do.
I love that. I was actually just reflecting on this, Kate, because I'm going to be starting sort of some other initiatives within our company in the real estate space. And sometimes I think for a couple of years, I've like wanted to do some of these things, but then there's just like, you're complacent in other areas maybe, or maybe I was held up. But I think what it was is like, I look back and I'm like, what do I need? Every time I did something or built something within the company, I hired a coach, found who was doing the best at it. And I went and like, I'm going to pay you. I know it's going to be a quote unquote expense right now, but really it's an investment. And I'm going to pay you and I'm going to take as much as I can from you to learn. And then I'm going to put it into action. It's like, it's going to be messy, but we're going to figure it out. But having that coach, I think, is so important. What was that like a really big catapult for you with your coach that you found?
Yes, definitely. I mean, it's just someone to like bounce stuff off of, learn from. From day one, even in chiropractic, I've had a coach. I hired a chiropractic coach, consultant, whatever you want to call them, from day one. Yeah. I ended up marrying one also. So, yes.
Well, you get a better rate, I hear, if you marry him. I think they give you a better
actually,
rate.
But
no,
still charges me.
Wow,
I know.
What a guy!
I know.
What a guy! Oh, that's hilarious. That's such a great nugget, though. I think you have two people here, guys, that you're listening to who've had, I guess you'd call it success. It depends on how you define it, but we've made progress. We're doing, she's doing chiropractic and not seeing patients. I mean, that should tell you guys something here, unless you love seeing patients every day, but you're using the power of leverage of other people and you've built a business now that you can work on the business, not in the business. And now you're just taking a lot of those skills that you learned. And it sounds like you're applying that into the real estate space and you're just taking the same lessons. I love what you said. It doesn't matter what industry you're in or what business you're in. You're just doing the same basic principles here.
It's so true. Yeah. It is the same basic principles. From, awesome. Your systems and your procedures, when you're running a business to your networking, your marketing, it all applies.
It all applies. Yeah, That's awesome. How did you find your coach? Because I think this could be something for some people when they're like, great, I'd love to get a coach, but where do I find one? How do I know they're reputable? How do I know that they're somebody I can actually get some value back from versus just throwing money down the drain?
So I met my coach basically through networking groups, the Wisco-RIA. He was a speaker.
Okay.
And that's how we connected and just started talking with him and kind of did my research on him and thought, okay, someone who's been doing this for 35 plus years, that's who I want to learn from. The person who has, had the successes, has been through failures, who has, been through it all. So that's who I want to learn from.
Been through 2008 and the market downturn. They probably got a lot of bumps and bruises that they've learned from, right?
Yep. So that's how I found my coach. But there's so many people out there in that space. Again, probably going back to networking, you can talk to people and find referrals that way. So yeah,
for sure. I think for me, the biggest way I've done it is exactly what you're talking about, Kate. It's asking other people who've either gone through that coaching program, like, hey, what was your actual experience? Or like I belong to a networking group called the Collective Genius. I've had Leon Barnes on a few episodes ago who represented the Collective Genius on there. And it's just an awesome group of networking, at a level of people all over the country. And then you can, same thing, like, oh, I want to get into this, vertical over here within real estate. Who is doing it at a high level over here? And then, hey, who did you learn from? Like I could learn from that person too. But then it's like, hey, who did you learn from? And then I can go and, get that coach or get that person as well. But we're probably going to beat this dead horse here a little bit, but it's about the networking.
It truly is. And, it doesn't even have to be kind of like you were saying, it doesn't have to be like even just a one-on-one coach, it could be like a group coaching or like mastermind group that you can learn so much from. I've been part of masterminds. I've, go to seminars and conferences regularly, listen to podcasts. So just, learning all of that and you just, kind of learn and basically just find your people that way.
Right. And that's like all the listeners of the Wisconsin Investor Podcast, Kate. They talk about how much faster they reach success just by listening to this show. It's amazing. Yeah. It's great. No, I'm just kidding. But in all reality,
I'm sure it's true.
Listening to a lot of this stuff and the podcasts and the audiobooks and all those kinds of things, that could be like a little mini mastermind or coach for you when you're out there. Talk about now. So you've kind of zeroed in now. You've done you've done the single family stuff and the small duplex, small multifamily, that kind of thing. And it sounds like you still hold those assets, but you've shifted into these syndications. For those who don't know what the heck is a syndication, can you just kind of make it third grade level? What is a syndication and as it relates to real estate?
Yes. So basically a syndication, you've got your group of investors. There's the active group, which is the GP general partners. And then you've got your passive investors, which are your limited partners. And the active partners, the GP team, basically does all the work. They, source the deals. They, find the markets, talk to the brokers, find the deals, do the underwriting, get the financing, everything start to finish, and bring in passive investors to partner with them to share in those profits. So basically that's a syndication in a nutshell.
So basically, like, I'm in the wholesaling space. What it sounds like to me, Kate, is, again, you're just using network, but I go out, I find a deal, and then I find a buyer. You're kind of doing the same thing. And we try to do a lot of the legwork up front. So we get inspection, we do video walkthroughs. Like, we try to make it as easy as possible for our buyers. So when they're going to look at underwriting a deal, it can be a quick 15-minute, hopefully process for them. It sounds like you're doing kind of the same thing, just on a bigger scale. And then you're staying in these deals, right?
Yes.
Typically?
Yes.
Okay.
So basically, we do all the underwriting, all the work, trying to, figure it out. And, there's so much, there's been so many things that I've been, underwriting, over the past couple of years, and a lot of them don't pan out, but, so we do all that. We do all that due diligence, all the underwriting, find the right properties, find the right offerings, and then bring that to the investors. And then, that's the thing. We stay in the deal. The GPs stay in that deal.
Okay. Mm-hmm. Yeah. I have a lot of questions around that too. But for you, when you're looking at like getting a passive investor, how long are they typically going to invest in some of these deals? I'm sure it varies, but like, is there a period where you say, hey, you can buy X amount of shares in this for, say, $100,000. This is your expected return. Here's how long it's going to take to get that. Or like, what does that typically look like?
Yes.
When you're putting an offering together?
So there's not just like, okay, it's always, X number of years. It just totally depends on the underwriting and what is going to, pencil out for the numbers. Basically, when we're underwriting, we're trying to get to a minimum of 15% IRR for our investors. And then with us, like at least a minimum of 7 to 9% preferred return for the investors. So typically I'd say, when we underwrite, it's anywhere from 4 to 7 years, 4 or 5 years to 7 years.
Okay. Mm-hmm. And in that 4 to 7, is that, you said it's to get to that target return, but is that also is the exit strategy, then you guys refinance that property in that 4 to 7 year period and pay off the investors their principal plus their investment, or how does that work?
So usually we try to basically just exit that property, all of us. I mean, we could refinance and then pay them back and then they're done with that. But no, kind of the goal is then to move on and basically we're looking for value add properties. So, we do what we can to increase the value of that property, turn around and sell it in that, 2 to 4 to 7 years, whatever it might be. And then, so leave a little bit of meat on the bone for the next buyer.
Okay. So you as the general partner team, or if it's you and maybe some other folks, right? You're talking about some partners and things like that. Are you guys then getting the big spread on it? Like, so you're saying, hey, this is our target for you as the passive investor. Anything above that is sort of our value that we're bringing, or how do you guys typically do it? Let's say you have a banger of a deal and 4 to 7 years, you've got a huge spread. You guys are exiting it. You're going to make a bunch of cash. Is that going back to the passive investors, or are they getting their agreed upon sort of amount up front?
They're getting their agreed amount agreed upon amount up front. If it ends up being more than that, so it's basically a 70-30 split. So 70% to the passive investors, 30% to the GP team.
Okay. Got it.
Mhm.
And are you guys typically funding some of these as well, or is everything from outside investors and you guys, your funding, quote unquote, is your sweat equity you're putting into the deal?
Both. I mean, yeah,
Okay.
we put our own money into it, and then also, our sweat equity.
Okay. Got it. And so most of these folks that are investing in this, then, Kate, they're basically covering like the down payment and the rehab. Is that what the passive investor is for? Is that their purpose in the deal?
Yeah, basically, that's a lot of it. Yeah,
Okay.
yeah. When we're capital raising, we're trying to come up with the money for the down payment, and then whatever value add rehab that we have to do.
Got it. Okay, cool. And then I'm going to go back to, just for those of us who are third grade level here, like myself, IRR. Can you just explain to everybody in third grade terms, IRR?
Internal rate of return. Basically, it's the amount that they're going to, like with the investors, what they're going to get per year, their returns per year. So when
Okay.
we have an investor come into the offering, we pay them their preferred return, which is getting paid out along the way. So if they say have a 7% preferred return, we usually pay that out quarterly. And usually when we take over a property, it might be, maybe within, towards the end of that first year, just to get that property stabilized. But then we start distributing those returns to the investors, and they get that preferred return along the way. And then at the end, when we exit, then they get their initial, capital back plus their IRR, the difference between their preferred, what they got for the preferred return, and the IRR.
Okay.
So
let's say they're getting a 7%, they're going to get an extra 8% bump at the end, is what you're saying, based on that whole period of time?
Yeah. So say it's a 17% IRR. 7% of that 17% is going to get paid out along the way, or 7% of that 17% will get paid out along the way. Then that difference, which is the 10%, will all get paid out at the end. Does that make sense? Did I explain that in a way that made sense?
100% for me. I think that's clear as can be. Yep. One question I have now with your guys' offerings, if I'm a passive investor and let's say I'm maybe I'm a doctor or something else where I have active income, and then there's me, the passive investor who's a full-time real estate professional, are there any kind of tax benefits as far as, if I'm investing in some of these, can I get a chunk of the depreciation, offset some of my income, or how does that work if you're passive in some of these deals?
Yeah, absolutely. So we usually will do like a cost segregation study. So one of the offerings that we have currently that we're bringing in investors still, which we own the property, that one we did a cost segregation study when we took it over last fall, and it was between 40 and 50%. And then this year it should be a little bit less than that. But so yeah, if you are in real estate, then you can get that depreciation. So there are some definite
that's awesome
tax benefits that way.
Yeah, 100%. Well, if this big beautiful bill gets passed, we're going to be back to 100% bonus depreciation, is what I'm hearing out there. So that's exciting for us as investors out there. If you're not understanding exactly what we're talking about, that's okay. We have other episodes, back with some accountants that are talking about this. Just know that you can write off a lot more stuff if bonus depreciation is at 100% and you're an active investor who's buying and holding properties, but you also have active income. Fingers crossed we get the 100%. I was like, you can do whatever else you want with that big, beautiful bill, cut whatever else you want. Just leave bonus depreciation, please, at 100% for me. Thank you. Because I think right now this year it's currently set to be 40%. Is that right?
That sounds about right. Mm-hmm.
I think it's 40%, which basically means if you have $100,000 of loss that you could have taken against your income, you can now only take 40,000 of that this year. But if this rule gets put back in or this thing gets added into the big, beautiful bill, now you'd be able to take the entire $100,000 against your income, which saves a lot of money in taxes for sure.
Yeah, that will be huge.
When you guys go to sell that, how are your investors offsetting? Because you do have to pay it back on the road if you do sell. So how are the investors offsetting that? They're just investing in another deal with you then to take that that future bonus depreciation?
They can, yeah, they can definitely do that. And that's, I guess, kind of up to them, if they want to continue to invest or just walk away and figure it out.
You probably wouldn't be too upset if they did that, right? You'd be like, yeah, that's a good
If
plan.
they invested again,
throw that
no.
money back. Yeah, throw that money back in here. Come on now.
Right.
Let's keep it rolling.
Right.
Well, that's pretty exciting stuff. How are you guys finding these? You mentioned talk to brokers before. Is that been like the acquisition strategy? The brokers are sending you guys a lot of deals to underwrite?
Yeah, again, it goes back to those connections, right? So, especially my partner who's been in this for forever, he just knows, has the connections with the brokers. But that's been part of my work as well, is just making the connections with the brokers, just finding the markets that we want to be in and then making those connections with the brokers, letting them know what our buy box is, what we're looking for. And, hopefully they can bring us some good deals.
That's awesome. Are most of these just kind of off market? Like they have a seller who's interested in selling and they have the buyers that they know are ready, willing, and able to buy. And they're just, sort of shopping those to the people that they know, like their short list. Like, are these listed, on some of the websites and you guys are going out there and finding them?
Oh yeah. Some of them are listed on the website. So yeah, some of them are not just off market, but obviously that's where, if you can make those connections with the brokers and let them know, reach out to them, let them know what you're looking for. Then when they find something or they have something before it goes to market, then they'll reach out to you and let you know.
And I think those of you out there that are listening to this, and you're like, I don't want to get into this multifamily syndication stuff. This isn't for me. I'm gonna move on to the next episode, something else, right? Before you do, just listen to what Kate just said there. This is so important for us too. Like when we're thinking of like, hey, we have this deal that we could get under contract. If I know your buy box and I know exactly what you're looking for, I'm going to have a lot more confidence, to go lock that up at the numbers that I know I can get it for, because I know it's going to fit your buy box and I'm going to be able to provide you another deal. And you're going to be the first person I think of, right? If I know you're very clear on exactly what you want, as soon as I find it, I'm like, yep, this is going to Kate. I'm calling Kate first. Let me give Kate the first opportunity. So I think those of you guys out there listening to this, get really clear on exactly what you want and then tell everybody exactly what it is that you want and let them bring you those specific deals. And you'd be surprised that, like, there's one guy I know, he buys only in a specific town. I literally just wholesaled him a deal the other day because I was like, the numbers are kind of tight for us to go put it out to anybody. I'm just going to call this dude because otherwise we're just going to cancel this contract and move on. And we ended up working a deal out and boom, I know he buys everything in this town. So, but I know his buy box. So I brought him the deal first and he got first crack at it. So yeah, I think that's a huge nugget.
That is, yeah. And that was one of the first things when I started, looking for some of these bigger properties and, doing the syndications, just got really clear on what my buy box was going to be. So then when you're communicating with the brokers or the wholesalers or whoever, then, you can, let them know what you're looking for and they can find you the best deals.
Yeah. Magically it starts showing up, right? Mm-hmm. You don't have to do a lot of work after that, but then it's just making more connections with more of the brokers, right?
Right.
And letting them know. How did you come up with your buy box, Kate? Maybe you can talk about that process. So somebody out there listening to this, they're new, or maybe they're like, I don't know. Like, first of all, what the heck is a buy box? Let's just talk about. And then how did you come up with crafting your buy box? Like, what was your process to get to where you are right now?
So a buy box is basically, what are you looking for? Is it like with me with syndications? Okay. Am I looking for multifamily? What kind of assets am I looking for? Multifamily? Am I looking for hotels? Am I looking for parking garages, mobile home parks? What is it? And so, getting clear on your asset class. And then, okay, multifamily, I knew that that's what I wanted to do. And, from there, break that down. Okay, A, B, C, D class properties. What am I looking for? I knew it was value add properties, B, C class properties that we can add value to. And, just kind of the number of units and the price. What's your price point? What are you looking for? Part of that is, what do we think we can, what's our investor network? How much capital do we think we can raise? So that was another part of trying to determine, my buy box. So Yeah. So that's the buy box. That's kind of how I narrowed it down and figured that out.
Now, were you basing a lot of this, Kate? So those are really good answers, by the way, for you guys listening. There's a lot of nuggets in what Kate just said. But when you were thinking about it, were you also thinking of like your end goal when you were crafting this? Like, so I need to do these multifamily syndications because I like multifamily or whatever the case is, but also because it's going to get me this end result that I'm looking for. Or how did you end up landing in this area or this arena as you were crafting the buy box and not settling, but figuring out that multifamily is what you want to go after?
That's a good question. I did I kind of figure out that, I don't know if I looked at the end result. I just knew like what was reasonable to me at the time and what could I figure out. And I think my confidence level, I wasn't going after $50 million properties when I'm just starting out. So,
yeah.
So I think that's part of it.
Yeah. Well, then I asked that question because like for me, I think about a lot of times it's like, why am I doing what I'm doing really at the end of the day? Or why do I want duplex? Or why do I want this? Or why do I want that? Like if I get clear on why I want it, and then I'm like, okay, this is a means to get me to that greater purpose or that end result or that lifestyle I'm looking for, that passive income level I'm looking for, or that active income level I'm looking for, whatever the case is, if I think it's a viable option for me and I'm really strongly attached to the outcome I'm looking for, it's like you took massive action in this arena. My guess is either consciously or subconsciously, there's some kind of greater pull. And I think you mentioned it, maybe it has to do with, getting out of the chiropractic business and having something, to do outside of that. Maybe that was the bigger purpose and where multifamily came in. Maybe that was, intellectually stimulating enough maybe for you to like, all right, this is more of a challenge for me. This is going to be, and that's why I was wondering if there was something there that was beyond just multifamily as the buy box for you.
Yes, absolutely. That definitely had a huge part in it. Just knowing that in 2026, I'm selling my practice, I'm exiting chiropractic. And, just kind of, just real estate in general, kind of part of my plan. You can do it from anywhere. I want to do more traveling and have more freedom to just kind of do what I want to do. And I think the challenge of learning something new, like I said before, I love learning. I love challenges. I'm one of those people too. I set goals and I meet my goals and and I'm on to the next goal. So what else can we do? How much bigger can we get? So I'm just kind of that way. So,
I think a lot of entrepreneurs are like that, right? Like we're like, okay, cool. Conquered that board. What's next? Right.
Yeah.
Let's move on. Yeah, somebody else go run this other thing. I started it. I got it going. It's great.
Yeah,
I need something else.
That's good. Then they're done that. Let's just move on.
100%. Yeah. I'm totally. We're totally jiving on that level. Was there a reason? You could have done parking garages. You could have done mobile home parks. You could have done some of these other bigger asset classes. Still, what was the reason for you that you chose multifamily?
I think because I was already doing the smaller single family, small multifamily stuff, kind of knew that. And I invested passively in the multifamily. And so I thought, okay, that's kind of what I know. And then I think too, there's a huge housing shortage in the US, right? So I think multifamily is pretty safe that way, pretty recession resistant. Multifamily. Yes. So, it's not like retail or office space, which, what happened in 2020.
Yeah. So making a little bit of a bounce back now, but yeah.
Right. Yeah. So I guess that's why multifamily. And I felt like I knew that better. So I kind of wanted to just scale that more.
Sure. More natural for you. You already had a little bit of a base of knowledge. You had some of your own stuff going. You mentioned BC class. Now, just for the audience, can you explain B and C class and what are these classes? Because when I got started in real estate, I'd hear it on podcasts all the time. People would be like, yeah, I buy C class properties. And then I'm like online, I'm like, where do you see what class it is? It's like, how do you know what, now I know, but like at the time I'm like, where are people getting this information? Can you just explain to them,
Sure.
In general terms, what B and C class or these classes mean to you?
Right. So C class and I don't know exactly the years. It could be like a 1960s, 70s product, even 80s. That basically they're a little bit more rundown. They need more work. So that's where, you have that value add. You can go in and rehab and update, the units. You can, update the exteriors. So, bring them from like, say, a C class up to a B class property. A class would be like, your new, apartment complexes or, maybe even like luxury apartments. B and C class, not luxury.
Right. Yeah. I just thought like I'm glad you mentioned that, or I wanted you to explain that a little bit. Cause I think for newer people, they're like, there's gotta be some kind of like, if it's this, then it's B. If it's this, then it's C. And it's kind of like there's general parameters around what is a B and a C and an A and all this stuff, but there's not like you're going to go on Redfin and it's going to list C class and it's going to, it's just subjective in some ways. I mean, everybody kind of agrees on what's a C and what's a B, but it's not a set. Like it's 1960s to 1970s and it's this type of stucco and this, it's very much like, yeah, there's value add here. It's affordable, probably more so, right? It's this, that, or the, but it's not a set.
You're going to get it's not black and white, cut and dry.
Yeah.
Yeah.
Yeah, exactly. Well, I'm glad we mentioned that. Yeah. I think this has been awesome, Kate. As you're out there, like, what are the sizes of properties? So you mentioned this earlier, like you're limited sort of by the amount of capital you think you can raise. Is there a certain number of units? You mentioned that as your buy box, but like, where did you, when you did your first offering, has that grown since you've done the first offering, or is it kind of within a similar range? And about how many units are you guys typically putting together?
Yeah, it's probably still about a similar range. So like the first one, 65 units.
Okay.
So in my buy box was, I think anywhere from like 40 to 80 for my first offering. And,
okay.
So, I mean, we're fine going bigger. I've grown, I started, since I started doing the syndications, I've added another partner. And so we've kind of grown that way. So we have more, I guess, access to capital, nice. More investors. One of my partners is also a chiropractor. So, we do a lot of events and make a lot of connections with other chiropractors, of course. So, in fact, we're going to Miami on Thursday. So we have a big chiropractic event that will have a booth for Ascend Equity and just make some good connections with chiropractors, which, so many of them have no idea what this is, syndications, and that they can actually own real estate without having the work of the real estate. It's just been it's actually been pretty cool when we go to these events and we're talking to other chiropractors and they're like, wow, what's this? Like I can have real estate and I don't have to do anything with it. And usually we're the only ones, like the only exhibitors with any kind of booth financially related or anything with real estate. And the feedback we get is great. They're just like, wow, this is so exciting. Like there's nothing else like this here. I'm like, yeah, isn't it cool?
Oh, that's amazing. That's awesome. There's a gentleman in our mastermind group, Dr. David Phelps, and he's a retired dentist. And he does very similar to he has a whole mastermind group now, and it's just dentists in it. And all they do is they find assets to passively invest in. So like what you're doing, I think is so awesome because you have the credibility with them of being a chiropractor. And then a partner now who's also a chiropractor. So you can talk the language with them and talk about your struggles and how did you find, ways to put your money to work and all those things as you're trying to grow your own practice, and you can leverage that. And so you guys listening out there, like, what do you know? Like, what industry are you in? What do you know? What are you really good at? Go find the people that are really good at that stuff who probably know nothing about real estate and be that opportunity for them to be able to get a return on their cash that's sitting idle or that they're struggling with a place to place it. Trust me, you're giving them an opportunity. You are not asking for money. You are giving people an opportunity to put money that's probably dead cash just sitting in their bank account or in some, low yield savings account. They call it high yield. I call it low yield savings account and put it to work at a much higher yield in something else that they don't have to do anything other than scratch the check for the most part. Right.
Oh yeah, absolutely. So yeah, it's pretty cool. And like you said, you're giving them an opportunity It's not like, okay, I'm selling this. It's like, no, you know what? This is an opportunity that you didn't have access to before.
Mm-hmm.
And I tell them too, it's like, okay, chiropractic isn't going to make you rich. You might make good money, but what are you going to do with that money?
For sure. Yeah.
So,
In the chiropractic space, do they have other, I know like you go work for somebody else, right? You get a 401k, or you think like, are chiropractors doing any of that? Or are they pretty much just like, putting their cash in the bank account, or like what's the general wealth building strategy for, or retirement strategy for, chiropractors for your example? Is there any?
I think it just varies depending on the person. Some of them, I think it could just be, all right, we're going to put it in a IRA or 401k, whatever it might be.
Mm-hmm.
And just let it sit there. And, that's my retirement. Some of the chiropractors that I talk to have multiple practices, so they reinvest in building, a business, which is
Sure.
good strategy. But then
Yep.
again, you got to turn around and do something with that money, right?
Right.
So yeah, some of them do real estate, but there's only been a very small handful that actually passively invest. So,
Okay.
and I think just because they
Okay.
don't know that it's out there.
Right. This is so good, you guys. Again, if you tuned out because you're like, I'm not doing syndications, you're missing out on a lot of really good nuggets here. One of the other challenges for a lot of people, especially newer people, is access to cash, right? They want to do flips, they want to do rentals, they want to build their wealth through real estate, but they're limited by the capital. They have a good W-2, but they're not accumulating enough cash to be buying 100 doors, right? I mean, it's tough to do on your own when you're first starting out. And so how do they raise private money, right? This is exactly what you're doing, Kate. You're going out and you're networking and you're raising capital and you're bringing people in to help do it. You're just doing it on a bigger scale with bigger properties. But what are some of the things when you're having conversations, like when you started this with people who are raising capital? Like, do you have any like quick tips for somebody, say, who's looking to maybe get a duplex and they need, somebody to come in and be the capital partner for the down payment and the rehab? Like, what would you, say for them for quick tips on how to approach maybe somebody out there who's a potential, money partner?
I think just tell them what you're doing, tell them what you need, and be transparent. Do your due diligence with the properties that you're looking at, so that you can come back and show them the numbers. Like, we're very transparent. You can go into our investor portal, see all the numbers, see all of our underwriting. I think that helps. So just being transparent with all of that and knowing what you're getting into so that you can convey that to your potential investor.
Yeah. Yeah. The credibility piece is a big piece. Even if you're brand new and you've never done a deal, if you prepare and you do your homework and you present it in a professional manner, you're probably going to have better success than just kind of running and gunning and trying to figure it out as you go. Right.
Writing it on a napkin. Yeah. Here's my numbers.
Yeah. Yeah. No, if you're a really good salesperson, it might work. You might do really well. But for the majority of people, my guess is you probably, yeah, good. But my majority of people, you're probably going to want to be a little prepared to make sure you do your homework. And, the other thing is, and Kate, maybe you can talk about this too. One thing I think that holds people up, and I know this has been maybe a limiting belief for me as well in syndications, is when you're taking other people's capital, there's a lot of pressure, right? If you have integrity, you don't want to let these people down. You don't want their money to go kapoop, right? Gone. Mm-hmm. What are some things, how do you juggle that as much as possible when you're raising this capital? Like, where do you get that confidence from? Is it from the underwriting to make sure that you're feeling really confident that these people's money's safe, or how are you juggling that?
I think it's the underwriting, and, we did our due diligence. I feel comfortable that when we find something, okay, we're doing the underwriting, I feel like we're doing it for them. It's not, just for us, but, we have to bring something that's going to be a really good offering to our investors. So I think that is huge. Doing your due diligence. That's a big part of it.
Yeah. That'll give you the confidence to know, there's a really low probability this deal is going to fail.
Right. And then, just, the team, my team, I have full confidence in my team. So that's huge. Um, I put my own money into it. So, I have the confidence myself. So it's not just like I'm going to you and asking for you to put your money in when I've done nothing. Of course,
Right.
you've got that sweat equity that we talked about. Um, but yeah, I think those are some of the big things.
Right on. And one other thing I want to touch on before we start to wrap here, Kate, you mentioned, markets, right? And doing the due diligence on the markets. Like for somebody out there who doesn't have a market picked yet for their own purpose, a lot of times we recommend, hey, if you're just starting out, start in your backyard, right? Place you're comfortable with, the streets, the neighborhoods, that kind of thing. But maybe for somebody who's maybe they're in Podunk, Wisconsin, which is a very real possibility, and they're looking to get somewhere where there's some population. Like, what are some just key things that somebody could be looking at as far as, maybe picking a certain market to start in?
I guess what we look for is markets that are showing growth as far
Okay.
as population, income. We don't want a dying market. Um,
Yeah.
Safe schools, safe or good schools, safe neighborhoods, that sort of thing.
Okay.
So, yeah, I think that's the thing. Just looking at, and then looking at also, what are if you're looking at multifamily or single family, whatever it is, just looking what is the outlook, the comparables like rent wise, what can you
Mm,
get, you know what you can can you buy that you can maybe is under market rent that you can increase and increase that NOI that way.
yeah. Yeah. That's great. What are some resources, when you're talking about like, hey, we're looking for comparable rents, we're looking for population growth, like what are some of the resources you guys use to look that stuff up?
So when we're looking at the markets, like one of the big thing is the CoStar report. You can look at those.
Okay.
That'll tell
Okay.
you a lot of information, quite a bit. Just looking up like apartments.com and looking at comparable rents that way. Um, so those are some of the resources that we look at. There's another one as far as, and I can't think of it, as far as neighborhoods and safe neighborhoods and schools. And sorry, I've lost it. I
That's
can't
okay.
remember the name.
That's right. If you think of it after this, text it to me. We'll throw it in the show notes.
Okay.
There we go. Yeah. That'll be perfect. Well, that's good. The CoStar report, is that something you guys have to pay for, or is that something that's available for anybody out there?
I think you sometimes you have to pay for it, but if you know people or you have good connections with the brokers, sometimes they'll just give it to you. So
Yeah, because they get it all anyway. Sure. They'll
yeah,
just send it over
yeah,
to you.
yeah.
That's really good. That's really good. I know there's another one. We had Colton Van Elzen on, who was at the meeting as well a few episodes ago, and there's a few resources in there that you can look at for a lot of market data. I think it's the Redfin Data Center, if I remember correctly. They've got a lot of really good data on just more for the single family duplex type of stuff, but sale prices, are they going up or down, days on market, those kinds of things too can be a good indicator of the strength of a market, of whether we're in a buyer's market, a seller's market, or prices going up, prices going down, all that kind of good stuff. But Kate, this has been awesome. I learned a ton on here. I've got a whole page of notes over here that I was taking down, and I'll probably have to go back and re-listen to this because there's a lot of stuff. Again, some of this stuff I needed somebody to explain to me. I've been doing this for 8 years. So if you're brand new out there listening to this and you're still listening, that means we got a lot of good information in your earbuds, but you might have to go back and re-listen to this. A lot of this stuff is a new concept for you. But these can all be helpful, even if you're not at the level of what Kate's looking for right now. There's so many things that Kate talked about in here that you can apply in where you're currently at in your real estate investing journey. Kate, before we wrap, we always ask one question because we love Wisconsin. And we have people outside of Wisconsin that sometimes they want to get it. They want to get in Wisconsin. They want to get in the market a little bit. For you, do you have a favorite Wisconsin tradition or a place to visit?
That is a good question. Um, as far as anything, like
Anything, whatever. Fill them in. What do they got to know about Wisconsin?
well, of course, you have your traditional Wisconsin stuff. You've got your Friday night fish fries and your supper clubs and all that. So one of the supper clubs I love is in Tomahawk, Wisconsin, Bootleggers.
Okay.
It's on Lake Nokomis.
Okay.
Yeah.
Ooh, there we go. And Tomahawk's a beautiful area. That's come up a lot for a lot of the guests on here. That area, Vilas County, that kind of stuff is beautiful. And you're up in that neck of the woods, right? You're in Anago, not quite.
Yep, I'm in the Anago area. Yep. Mm-hmm.
Yeah. So maybe if you're in the Anago area, come visit Kate, get a little adjustment from one of her people up there and feel a little bit better on your journey up north or whatever you're doing up there. Maybe after a long weekend of four-wheeling or whatever you're doing, you might need a little adjustment if you're hanging out in Anago. So
that's right.
Kate, this has been great. If anybody wants to connect with you to talk about maybe investing passively or get involved, with you and any of the offerings that you have, what is the best way for them to get in touch with you?
So you can find us on our website, which is ascendequitygrp.com. You can email me, just kategress@gmail. So yeah, that's how you can get a hold of me.
Oh, awesome. And you have a book out. Okay, can you talk about the book and how, if anybody wants to get access to the book, where
sure.
they can get that?
I have an ebook, free ebook. It's on basically passive investing, a passive investing blueprint. If you want it, just reach out and I'll give you the link, Corey, and you can put it in the show notes if you'd like. And then they can just go to that and sign up for my free ebook so they can learn more about passive investing.
Awesome. Thank you so much, Kate, for being on. Thank you guys for listening. As Kate mentioned earlier, share the show if you're still listening to this point. Share it out on your socials and whatever else. Again, helps us, but also more so for you guys to tell people what you're into. Tell them what you're doing. It's going to create conversations. It's going to create leads. It's going to bring in people in who have money and want to invest passively with you. So share the show. Help us get the word out, but help yourself as well as you're building your network. Kate, thanks so much for being on. Thank you guys for tuning in, and we'll see you on the next episode.
Thank you.